Welcome to our story of John, an everyday individual like many of you, struggling with the complexities of Forex trading. Meet John, a man of routine, who lives a life as ordinary as it gets. He wakes up at 6 in the morning, showers, and drinks his coffee while scanning the day's financial news. Then he heads off to his 9-to-5 job, where his mind often wanders to the world of pips, pairs, and profits. When the sun goes down, John dives into the world of Forex trading. The market's volatility excites him, but it also brings along a wave of uncertainty and fear. He's constantly torn between the two worlds, juggling his day job and his passion for trading. His journey is a roller coaster ride of high hopes, crushing disappointments, and the constant fear of leaving money on the table. John's journey is not unique in the world of Forex trading. Many of us have been in his shoes. Let's delve into John's first struggle, his fear-driven inaction. Picture this. John enters a trade with high hopes. The market starts to move in his favor, and his trade begins to generate profit. It seems like he's on a roll. But as the pips start to stack up, so does John's anxiety. He's caught in a mental tug-of-war, battling the nagging thought that he might exit too soon and miss out on even more profit. He tells himself, "I can't close this trade now. What if it keeps going up? I'd be leaving money on the table." His fear of missing out paralyzes him. He hesitates to set a take-profit level, determined to squeeze every possible pip out of the trade. But here's the thing about Forex, it's unpredictable. In a cruel twist of fate, the market does what it often does. It reverses. John watches helplessly as his potential profits dwindle away. The opportunity he had to close the trade in profit is now a fleeting memory. He's left with a sinking feeling in his stomach and a regretful thought, "I knew it. I should have taken my profit. Now it's all gone." This scenario is not unique to John. It's a familiar narrative for many traders. The fear of missing out on potential gains keeps them locked in trades longer than they should be, and when the market takes a turn, they're left with losses instead of profits. John's fear-driven inaction is a clear example of how letting fear control your trading decisions can lead to missed opportunities and losses. The market is a battlefield, and fear is a formidable foe. But the key is not to let it paralyze you. It's about finding a balance, setting realistic profit targets, and sticking to your trading plan, even when fear tries to steer you off course. John's fear-driven inaction, a common scenario, leads to missed opportunities and losses. In the end, it's not about the money left on the table, but the lessons learned from the experience. And for John, it's a lesson he won't soon forget. John's second struggle is the complete opposite of his first, his early exit regret. After having his fingers burned with fear-driven inaction, John decided to take a different course. He made a pact with himself not to let fear hold the reins anymore. But as it turned out, his fear just wore a different face this time. He entered a new trade, his heart pounding with the memory of his previous loss. This time he thought he would be different. He set a conservative take-profit level and kept a hawk's eye on his trade. But as soon as he saw a modest profit, that old fear came creeping back in. The market is a fickle mistress, he thought. What if it reverses again? The fear of losing his hard-earned profit gripped him. So he did what he thought was best. He closed the trade prematurely, locking in a small profit. "I can't risk losing it all again," he told himself. "I'll take what I can get." But the market, ever unpredictable, had other plans. After John made his early exit, it continued to climb. John could only watch helplessly as the price went higher and higher. He had exited too soon. The potential gains he could have made haunted him. "I did it again," he lamented. "I left so much money on the table." You see, John's early exit regret is just as debilitating as his fear-driven inaction. It's like being stuck between a rock and a hard place. On one side, the fear of missing out on further profits keeps him in trades longer than he should. On the other, the fear of the market reversing and wiping out his gains makes him exit trades prematurely. And so, John finds himself trapped in a vicious cycle of fear and regret. He's either paralyzed by the fear of losing potential gains, or he's exiting trades too early out of fear of losing what he's made. John's early exit regret, another familiar scenario, results in missed opportunities for significant gains. It's a delicate dance, a tightrope walk, and John, like many traders, is still learning the steps. These two scenarios shed light on the real struggle many traders face. Our friend John's experiences highlight two key points. First, the paralysis of fear-driven inaction. It's like being a deer caught in the headlights, frozen by the fear of potentially missing out on more gains. This fear can sometimes lead to holding on to a trade for too long, ultimately resulting in losses when the market reverses. Second, the pendulum swing to early exit regret. After being burnt by inaction, it's all too easy to swing too far in the other direction. Overcorrecting can lead to prematurely exiting trades at the first sign of profit, driven by the fear of the market reversing again. Unfortunately, this often results in leaving significant potential gains on the table as the market continues to move favorably. Both these scenarios underscore the importance of finding balance in Forex trading. It's about treading the line between fear-driven inaction and early exit regret. It's about recognizing these fears and learning to manage them, rather than letting them control your trading decisions. Remember, every trader experiences these fears. It's part of the journey. But it's how you respond to these fears that can make the difference between success and failure in the Forex market. John's struggles, like many of ours, is a delicate balancing act. John's struggles may seem daunting, but there's hope on the horizon. As we've seen, fear can be a formidable adversary, especially in the unpredictable world of Forex trading. Many of you can likely relate to John's predicaments, caught between the fear of missing out on potential profits and the anxiety of losing what you've already gained. But what if I told you that there's a way to conquer this fear? In our upcoming part of the series, we'll be diving into the heart of John's transformation. We'll explore how John, just like any trader, discovers a path to gain control over his fear, resulting in more profitable trades and less self-doubt. We'll delve into the strategies he applies, the mindset shifts he makes, and the lessons he learns along the way. Imagine being able to confidently make decisions, not out of fear, but from a place of understanding and strategy. Picture yourself secure in the knowledge that you've made the best possible choice given the information at hand. That's the kind of breakthrough we're talking about. So are you ready to uncover the secret to overcoming the fear of leaving money on the table? Are you prepared to find out how John turns his trading journey around? Stay tuned for our next part, where we reveal the solution to John's struggles, a breakthrough that can make a world of difference in your trading journey.